So by the end of Sunday's session, and remember this is 5 p.m. Eastern Time on most Forex charts, 5 p.m. Eastern Time on the 11th would put price somewhere, I'll just say in this area here. So you can see Sunday the market trades down, trades up a little bit, and then comes back down. This is what price did. Start, midpoint, near to the end, end. Well, what happens in here? Well, think about this. If supply and demand drives price, and if price is going down, then what does that mean on this side of the line? Well, it means there's supply. And there's more supply than there is demand. Well, what happens on this side of the line? Well, there's demand. There's more demand than there is supply because we see price moving up. So let me remind you of why we're even in this discussion. The question was, I see 4 massive spikes on my 10-minute chart especially. Would that be a clue to buyers coming back into the trade at these levels? And the answer, this long dissertation is to give you my answer that, well, it's likely. And remember, that's about all we can know. We can know whether it's likely or it's a high probability that buyers are coming in. We can never know for sure. But we can line up signs that will tell us whether or not it's more likely than not that buyers are coming in. So we've got the structure. We can see a practical demonstration of the supply and demand, supply on this side, demand on this side. You have a literal shift in thinking over the span of several hours from one of selling to one of buying, from one of supply to one of demand. And that simply gets expressed in the chart. And what we're going to see is this long spike. That's what he's asking. Do these spikes indicate people getting back into long positions? And I would say, well, it's likely. So let's line all of this up, if we can. From a practical standpoint, if you think about it, in the Forex market, there are really only 2 times that everyone on planet Earth has to abide by. That's the Friday open and the Friday close and the Sunday open. So when you're looking at a weekly chart, and this is why I refer to the weekly chart and why I keep coming back to the weekly chart, because I know that this is something everyone has to look at and everyone has to abide by. The daily chart over here, it closes at 5 p.m. There are some traders who have their bars closing at midnight. There are some traders who have their bars closing at 12:30 p.m. Eastern Time. So these breaks from open to close on a daily chart are completely made up, and they're completely arbitrary, and I have no idea how many traders are actually looking at the same thing I am. This, on the other hand, I know they're all looking at, because they have to. What does that mean? What's the point of all that? Am I just blowing hot air or what? Well, what it means is, this Friday close is very, very important. Why? Well, think about it. Because during this week, traders said there's no way on earth that pounds are worth that much. But then they also came in and said, well, you know what? They're not worth less than that either. So what they're saying, basically, is pounds are worth somewhere in between these numbers. Now, the reason why I look at this, and I gave you the example the way I did, was because the market actually pulled up off of the low. Okay, so what that tells me is traders were not convinced enough during this week to keep on. They weren't convinced that there was enough bearishness. They weren't convinced that there was enough supply. They weren't convinced that the dollar was weak enough to continue selling. And they actually bought near the end of the week. How do I know that? Well, I know that because price closed off of the weekly low.